Good morning, ladies and gentlemen, everybody. Welcome back to the channel. So just a reminder, market is in a sale program or a bearish trend. I like to call them sell programs. But yeah, so currently market's in a sell program, just going through a bounce. That's pretty much what's going on. Market's still below 50 SMA, so we're not back to a positive trend just yet. So again, what we are seeing is an oversold counter long bounce that has yet to establish a new uptrend. So again, it's really just a bounce, but not into an uptrend. Okay. Alright, so we're just adding a little text to the screen, just kind of emphasizing that the market is still in a downtrend and that the market will remain bearish as long as it's below said level on the screen. Yeah, so again, if any of you guys got questions as we kind of come through, let me know. So yeah, just going to keep emphasizing it. Market is bearish below the price of $662.27. Good morning, Steve. So yeah, I mean, markets are just bouncing. Again, it's just an oversold bounce within a downtrend. This bounce has not established an uptrend, so just keep that in mind. Hours. And now it actually looks like the market is coming into the volume weighted average price of the current sell move. So a lot of times this can be a great short entry area, because a lot of times the bearish trend will sometimes resume from here and have a big drop. So pretty much the way I see the market right now is in kind of like the bigger picture, maybe. I won't call it big picture, but you know, somewhat of a bigger picture is basically market has, yeah, the way I read this is either we, pretty much have a big drop from here, or the market will hold on, it would reset to, yeah, so it's pretty much either we have to go into a mega another drop essentially, or the market's going to push back to $662.27. Right now I am leaned in the direction of down because this is the market bouncing up into that level for the first time. Well, I guess that's not entirely, I mean, it's, yeah, pretty much, because that day, or wait, that would be the breakdown day, so that would be overnight. You know what? It's debatable, because we might have done it there, but let me check the regular trading hours, because this is regular trading hours system. It's debatable, but I can't decide if this is a first tag or a second tag. So anyways, but still really same rules apply. Market is, this is just a secondary level that we like to use, the volume weighted average price. So, because it can kind of trick you up with what I'm saying, but essentially the market's simple moving average trend says that the market is bearish below here. Well, the price of 662.27. But also we use a volume weighted average price, which are these blue VWAPs, on top of that SMA system, and the rules of that one would say that the market is bearish below these VWAPs, whereas if you push into them, you should be looking for resistance first before looking to break them out and then reset back to the SMA trend. which is kind of more of a, and the SMA trend is really the one that controls the up and down motion, but the volume weighted average price is also a level that we can kind of use to determine more movement within that current downtrend. So essentially we're a little bearish into those volume weighted average prices, and we're not going to look for anything more long bias unless we establish a move above that volume weighted average price. And let me just double check one more thing. What? Yeah, that's correct. Yeah. And the upper distributions of these levels, or upper distribution of these volume weighted average prices line. Oh, I did a bottom. I want to do a top. Yeah, so pretty much, yeah, we also look at the upper distribution levels, and those come into right here. So pretty much the long target, and this is going to be what you're seeing on the screen right there. This is going to be the target, whether it be today or whether it be tomorrow or whether it be 3 weeks from now. The setup that I'm showing here, it's the same thing whether or not, again, it did it today, or if this went down for 3 weeks and then it came back up 3 weeks later, and we have, so again, this setup kind of repeats itself in a way that it always happens, and it just kind of depends on when the market wants to do it, kind of thing. And really what the setup is it's a reversal long trade concept that only comes when you're in a bearish market trend like we've been having. Essentially, when we identify that the market is slowing on the downside and it's now ready to reverse back up into an uptrend, a lot of times that trigger point is going to be this VWAP zone. And so we just know that until we, are comfortable in established market above volume weighted average price, we're not going to see the market do that and go back up. It's going to continue to do that and go down. So right now we're on the sell side of that move. Or, well, we're on the sell side of the volume weighted average price. When the price starts its uptrend on the 30-minute and then dips back and closes below a day later, 2 days, whatever it is, then breaks back over, which break would you consider to be the actual? That's actually a really good question, and I struggle with that at times myself. And I think really the one way that I just try to understand it myself is that any price movement above the 50 SMA is the potential for an uptrend, or, when we say the potential for an uptrend, be like, hopefully it becomes a good uptrend. But no matter what, just the price going above the 50 SMA is, and I've kind of changed my brain from saying uptrend to, positive or negative, and how much movement to the upside it has is another question. So I consider them both to be true, which is anytime price gets above 50 SMA, the market is turning positive. Now, there are moments when obviously, the market might break above and not hold, right, and drop back out. There's times that you can kind of feel that that's going to be the case. And that just kind of comes from, more of like market structure. How does the market look? And sometimes it comes from reading the VIX. That's kind of like, I guess the best example I could give of that real quick is actually, it's actually the other day. So let me just clean this. Well, I'll just go to, I can't do it like that. Maybe I'll just change this to one of these. Oh. whatever. I'll just delete this up. It was the drop the other day. Was that I don't know what day that was up because it's Friday, so Thursday. Was that Wednesday or Tuesday? I gotta get in the habit of not drawing on here because if you want to delete all the drawings, then you have to delete everything and restart. I gotta get better at that. What's up, Rico? Yeah, so Steve, yeah, the other day it was this. So right here in the pre-market, I forget exactly where the 50 SMA was at, but it was this line that I'm moving, this one. It was priced right around here the other day, something like that. And so in the morning, the market was above it, right? And then, so it was started positive. The market started positive in like the pre-market. And then into the open and into the regular trading hours, it flipped back to negative and then market got whacked, right? So even though the market was positive this morning, and I did mention that, I said, hey guys, the market is positive, but just because it's positive, it doesn't, guarantee that the market's just going to start a perfect uptrend. But we know where the price level is at. We know where that over-under is at. The over-under is here, right? So in that instance, it was, hey guys, the market's positive, but the volatility index is also positive. So two can't, that can't be the case, right? Two of those cannot be both positive, at least for an extended period of time. One of them will correct, right? So that's a situation where we had this kind of little blip where the market goes positive and you're like, well, is it going to be an uptrend? And in that moment, we were able to look at the volatility index and look at the buy signal on the volatility index and lean on the volatility index to give us more clarity on this setup, which was they were both positive. Well, it's like, why is the market turning positive while the VIX is also trading positive? That quite doesn't make sense. What would make more sense is if this morning pre-market, the market goes positive and at the same time the volatility index went negative. That would make me trust this long and say we're going to long this up, right? But the volatility index was not cooperating in that way. It was saying the opposite. And then also the previous day, we know that the market on that same day broke down the 50 SMA and went into a sell. Overnight, it had gotten back above that price. So we kind of already saw a sell move starting. And then it's like, the next day the market's over the 50. Is this little push above the 50 legit? Or is it a shakedown, right? And really just trapping longs that think a new buy move is starting. So what we saw yesterday, I think this was, or the other day, was the market's hindsight 2020. Because in the moment, I couldn't say for sure, but hindsight 2020, we would say, well, clearly this was a trap for the longs and the shorts to bank on, right? Now, in the moment, did I know that it was for sure going to be a trap of the long? No, but in the moment, I could see that the VIX was positive, the market was positive. That doesn't make sense. And at that moment, I chose to lean on the downside, even though the market said, we're above the 50 SMA. It was based off the breakdown the previous day. It was based off the VIX being positive. So in that moment, I could lean and say we're going to go this way, even though the system was on the positive side. Right. So hopefully that kind of helps. And then the same thing goes for buy moves, right? So if it was like which one's going to be a good one? Well, it's like generally if the market's going to go into a long operation, the VIX should already be negative or getting ready to break down and go negative. And as a result, we will look to long the markets a little more. So that's another thing that we haven't talked about this morning is the VIX. So, yeah, we'll get into that a little bit. I can take a look at QURE in just a moment. I was gonna do something. So I'm kind of moving slightly slow this morning. What was I about to do? I was just telling you about the buys and the move down and Oh yeah, the VIX. Here we go. So volatility index. Yay. We are where are we at? Right here. All right. So now look at this. So this Steve. This is for everyone, but kind of predominantly you at this point because this is still kind of like in conjunction with what we were just doing. So here's the market on the VIX. This is the VIX market, right? And it's currently positive. Why is my thinkorswim lagging? Stop freezing. There you go. Okay. So looking at the VIX, we know that it's positive. It started its positive trend here, where I'm putting that vertical line. That's where the uptrend starts, right? And where I'm pointing now, that was an uptrend back test, right? And so just in general, currently it's positive. Right now, the VIX is in its pre-market session, but we derive that price point of the 50 SMA from a regular trading hours chart. So right now, I have no clue, if I'm just looking at this chart alone, what's going on in the pre-market session. Therefore, it's like, I don't actually know, is the VIX positive or is it negative? I mean, I can't see the price action this morning. For all I know, it could be below the 50 SMA. So even though I'm getting the price point from a regular trading hours chart, still got to take a look and see what's going on in the pre-market. So let's do that. We know where the price point is at. We've highlighted it with the yellow line now, and we're going to go and look in the pre-market. We go look in the pre-market and we go, oh, okay. So we were, in fact, in a positive trend yesterday on the VIX, and now this morning we've sold all the way back off to the 50 SMA, or the level that would dictate positive or negative, okay? Let's go take a look at the market real quick. We can see that the market is obviously from yesterday, which yesterday's low of days were pretty much the support that we told everyone about yesterday. So, yeah, I mean, that's pretty cool. So again, markets are going down bearish. We'd suggested you don't want to be too bearish today because they're probably going to do a counter bounce. Short move in the morning, followed by a long in the morning, and then back down and long back up. So again, we're still in a bearish territory, but we had talked about watching for the counter long within this area of the market. So we've counter long bounced the market back up, right? And as a result, what has happened to the volatility index? The volatility index has sold down to the 50 SMA, which is now going to dictate uptrend or downtrend. So get this, right? So this is where it gets so much fun. Like, this is what the beauty of it, right? So remember how we said if the market breaks over, so we're looking at the chart on the bottom. If the market can break through the volume weighted average price of the current downtrend that we're in, then we can see the markets pop up to where? $662, $661. Well, we already kind of hit $661.50, but just in general, we'll just say $662.50. The market can go all the way up there, right? Now you might be saying, well, how do we know? Well, if the market's in a downtrend and we think there's a way that we can get it to still go up and hit $662.50, this is when I would look at the volatility index and go, what's the VIX saying? The VIX is saying it's right on the level that dictates uptrends or downtrends. So we're going to lean on the VIX today, because if the VIX goes into a downtrend and volatility starts to break down, then what's going to happen? We're going to break the market out of that level, and it's going to shoot up to $662.50, right? But we also have a scenario where the market has perfectly positioned the VIX back at the 50 SMA. And if the people that control the market don't want the VIX to go into a downtrend, it then stays into an uptrend. And then what happens? Then we take the market from where it's at right now and it becomes a new lower high, and we're going to run this puppy down. So we're basically using the algorithms on the VIX this morning for an uptrend or a downtrend to either break the market out of the volume weighted average price of the current downtrend on the market, or we're going to run this into probably a pretty decent sell move. Which way is it going to go? I mean, I don't really know, to be honest. I just know where it's probably going to go to if we do end up breaking out the long. If we end up staying in the short, then I'll have levels for where we're going to go on the downside. Just haven't really discussed those this morning. And I already have ideas of where that would be. They're just not on the screen. But which way does the market, which way does the VIX want to go exactly? I mean, that's as good as anyone's guess. We just know that obviously VIX this is what the market likes to do. The market likes to perfectly position itself so that it can swivel in any direction, And today we have positioned the VIX so we can do that, is what I would say, based off what I'm reading. So this is probably going to be one of the coolest days on the, maybe not, but I'd say it's probably going to be one of the cooler days on the stream because of the setup that is here. And when I say the setup is here, it's not that it's just some A+ amazing setup. The setup is the market is in a really cool position to learn from and see how markets react from here, right? You have something going on. It's not just markets are at random prices and we're waiting for something to happen. We're in the moment where something is currently happening, right? We have the VIX at an over-under. This is going to control a new downtrend potential or basically the continuation of an uptrend. And that will have an effect on today's market, right? So personally, I mean, I still want to lean bearish, but because that's really just my rules kind of thing is like I want to lean bearish pretty much as long as the price is below this VWAP, I stay bearish, right? But if in the event we start to get above and the VIX starts to break down, I instantly flip long and we take the market back to here. All right, so that's kind of the thing for me is we are right at the over-under level where things get very interesting. It's like on the flip of a dime, we could be blowing the market back into a long, and at the same time, this can be the start point of a nasty sell-off. So it's very interesting, and I really don't care which way it goes. I'm just simply reading the market and the volatility index and what can potentially go on here. And it's irrelevant to me. I mean, if we go down, yes, my 401ks and my Roth and all this other crap gets smoked, right? Just is what it is. If it goes down, then it's like, well, makes sense. We're in a downtrend. We're in a sell move. We're below the VWAPs. The VIX could be just kicking off a new uptrend right now today. Or it's like, well, VIX could be kicking off a downtrend, and sure enough, we're going to blow the market up. And that's what the market likes to do. It likes to set itself up where it puts the market on edge, right? So everyone that's been bearish this market, right? Everyone that's been bearish this market from the sell move and the breakdown, most people did not short in the pre-market that day and on the breakdown and hold the entire way. Most people probably would have shorted on this day, maybe on this drop, and maybe yesterday or whatever. And now their volume weighted average price is right where we're at. They're pretty much that is in the concept of anyone shorting these past couple days and holding their position and not closing, their average price would be where we're at today. So they're all like, shit, I can't afford for this to go any higher or else I'm for sure cooked, right? And so we're right at that point of this macro market, which makes it fun. So yeah, exactly. So the market's always kind of showing what it's thinking, but trying to hide its true intention, and just put everyone in this situation of, obviously constant, teeter-totter. It's a teeter-totter game, right? That's really what it is. So the market's kind of on that teetering edge where it's like, we can go this way or we can go this way. And it's everyone's volume of the market over the past couple weeks that we're going to kind of either flip and squeeze the market up, or we just bounce the market to get a better share price and then run it right back down. And again, it's just a game of back and forth, so very cool stuff. Very cool market situation we have today. I hope you guys enjoy. So it's on the screen. I mean, at the end of the day, I will probably do some more detail here on this, but it's pretty much there. It's on the screen. That's kind of the bigger picture for the day, and maybe like into tomorrow, I guess. But our first destination down is generally always going to be to screw over the pre-market traders of today's session. So as we're kind of being bearish, the volume weighted average price here and bringing the markets down a little bit, we would generally target back to a lot of times the volume weighted average price of the pre-market system, which would tell me that our pullback off the VWAP level that we've been talking about. I know there's always a lot of levels and stuff, but essentially we'd be looking for the markets to pull back out of this, you know, just like it's drawn on the screen, down to about there, that red box. So that's kind of our first intention of resistance from the pre-market top and down, is to essentially, right, run into resistance. Then we're looking to basically bring the market down to the volume weighted average price of all of the traders from the pre-market session, right? So like the same way that the market has bounced back into this zone and it's put everyone who's been selling the bear market from the sell signal on edge, bringing the market back down this morning to that red box I put on the screen would be putting all of the pre-market long traders on edge, right? So a lot of times the markets like to move back and forth to and from, let's just say, everyone's stop out, right? Or their volume weighted average price, right? To, you know, because you guys know, like, and you've read it, the market, you know, it always feels like it's out to get you, right? That's the saying. It's always out to get you. Or the market is, it always seems that as soon as you get into play and it's working, then next thing you know, it's coming back down and through your levels, right? And that's because the markets go up and down, right? And they hunt for liquidity and all these things, right? In generally speaking, where's the liquidity? The liquidity is going to be a lot of those volume weighted average prices where we know people are positioned, right? So that's the thing about volume weighted average price, right? It's a calculation of price and volume, etc. So the way that I kind of think of that is you're calculating your the players in the game, right? Your opponents, if you will. So all of the opponents from the pre-market trading session today have a volume weighted average price down at about $658.69. And all of the market participation, say over the past 2-3 days of selling, has a key volume weighted average price around $660.24. So right now we're playing a game of previous 3-day selling volume weighted average price amongst the current 1-day pre-market volume weighted average price of buyers. And right now I'm thinking that the volume weighted average price of the sellers over the past couple days is strong enough to bring us down to the pre-market, which we are doing right now. Ding, ding, ding. Crowd goes wild. Cheers. All right, so our first pullback trade concept is done for the day. Well, pretty much. I still think it's actually going to wiggle lower here. But just in general, if you're talking in terms of intraday momentum, that trade idea would be complete for the most part, right? I mean, yes, maybe we didn't hit the box exactly yet, so still a little room to go there, but that would be 90% of that intraday analysis concept of market movement, okay? I hope you guys enjoyed that. I have not forgot about your request, David, on QURE. I promise I will get to that at some point. So just let me know if you're still here. Well, you know, or if you have to run or something. But right now is kind of the heat of the moment for the market, and I just gotta pay attention. All right, so here's another thing, right, just to keep in mind. So what are we seeing as the market opens? Hold on, sorry, the screen's kind of weird. Hold on, I'm trying to zoom in here. Again, so you guys may or may not know what these are. So these are market internals, right? So I don't want to speak too quickly on that, but you see how we've come into that red box, and you see how it's kind of bouncing a little bit. That's a very common reaction because the way that this kind of works is pre-market volume weighted average prices are sort of that uptrend level that keeps the pre-market uptrend going, right? So if you look at the pre-market, it was kind of up and then it obviously went up. So if the pre-market system or if the pre-market volume and the pre-market traders are not going to get stopped out, this is where they hold their higher low and then drive the market higher, right? So also know that a lot of our pre-market volume weighted average prices that we discuss and that you see there, we use it in that fashion where we can pull the market down to it, and that would be the completion of that short-term trade. And now if the traders from the pre-market are going to prevent their stop out and keep their trend going, this is where they hold the market, and now we go long, and this is arguably our breakout spot. And if it's successful today, we arguably see the market squeeze all the way back to 66150 to 66250. Just depends, right? Again, we don't control the market fully, but that's arguably what we're looking at now, is a potential breakout on the market towards 66250. And that's obviously if the VIX maintains its breakdown here. You see how the VIX is now going below the 50 SMA. It's only 1 minute, right? And things can change drastically from 5 minutes to, the next 10 minutes. But let's bring up the 30-minute here real quick. And let me delete some of this stuff. Clear drawing set. So now we're using, see how the VIX is breaking down? So we're using the VIX's breakdown this morning to be even more long biased the market, because essentially, though we know the market is bearish below this level, we're using the breakdown on the VIX to basically bounce the market back up within its downtrend. So we're using the downtrend start right now on the VIX to be long the market even though it's in a downtrend. I know that's seems counterintuitive. It seems stupid, right? Why are you long the market in a downtrend? Because there's a different market entering a downtrend, and it's signaling us to basically be long, right? Even though it's opposite of its own trend, kind of thing. So that's what it's kind of doing. So hopefully that all made sense, and now we're just gonna kind of sit back and just chill and watch. So yeah, now that I think what I covered right there is good enough to kind of just, I think we're pretty good there. So I think I can go take a look at QURE. So yeah, we'll do that. So again, best case scenario today, long for the moment is back up to 66250. That is as long as the market essentially maintains over the prices of 6630 or 660.34 to 659.74. So yeah, essentially, again, as I'm going to draw it on the screen, just leave it. Essentially, as long as the market maintains above these two zones, we have the potential to go here. Now, if at any point we start to kind of get back down below, we'll probably change that analysis, but that's pretty much it for now. And we're going to need the VIX to kind of keep in this downtrend and continue down. And one thing, I forget, we need to look at the 1 hour here, because the 1 hour is the first target of our VIX breakdown. So you see how we broke down the 30-minute? This is our target. There's a really good chance that this is going down to 1622. I kind of forgot to mention that when we started breaking down, but those are always the rules. The rules really never change. The 30 minutes broken down, we're going to sell the VIX down to the 1 hour here. If the 1 hour does not hold support, then the market just straight blasts off into a long usually. So this is the moment where the VIX is selling down to its sell target of its 30-minute breakdown. Ready? I'm going to go into the 30-minute here. See this? Ready? So we're into the 30-minute. The 30-minute's the top yellow. 30-minute breakdown. Where do we target? We target down to the 1 hour. The 1 hour is here. We just hit our 1 hour sell target on the VIX. This is where the VIX sometimes holds the 1 hour support. And if the VIX holds the 1 hour support, that's what's going to temporarily or top this long move, right? So you see what I'm saying? It's like we just broke down the 30-minute. We've used that to go long the market up. Now the VIX is coming into his support, and if the VIX holds the 1 hour support and for whatever reason runs a nasty bounce, that's what's going to cause some hesitation on the top of the market. In the event there is no support getting held here at the 1 hour, which I don't think is going to happen, that's my gut feeling. I don't think the support's going to be good enough to stop this market from blowing up along here, but if it is, we'll see. But yeah, that's what it is. And if the 1 hour starts to break down, then that's kind of a new little catalyst that the 1 hour is breaking down, which then furthers the long push. So again, that's how you identify how far the volatility index could arguably sell on a day like today, is by using what I just showed you, which is a 30-minute breakdown to 1 hour trade. So we should, mother trucker, we're going to put this onto a 1 minute, and we're going to increase this screen. We're going to move it, and we're going to put this on top of the other one so we can look at the markets here. So that's where I would say you know, if you've been long, kind of like an intraday trade too, if you took a long down at the support on the bottom, which we didn't really recommend to do. We just looked at, say, hey, we should sell the target down to here because I think we could still remain bearish. And now that we're coming up through the volume weighted average prices, we have to be long, right? So, so kind of, you know, a day where some different strategies are colliding, right? Very important day. So that's how you can use, right, like I said, a 30-minute breakdown. So this is the market breaking down the 30-minute, obviously a false break above, then back down below, and then sell off to 1 hour destination. As a result, markets are going up, right? So really, really cool stuff. Like I said, today was probably going to be a fun day. A lot of stuff kind of moving and in position to, you know, for things to work, right? These are setups. These are things working properly in real time, right? Going to and from said levels. Perfect liquidity, you know, movement, right? Things are working. This is a great day. The markets have, this is a momentum, like this is a good day for the market. This is a day where people are going to get their ass kicked probably on shorts, right? Because they're off sides. This is, we'll see. I mean, I really hope the market blows up, you know, and doesn't get stopped at this 1 hour, but we'll see. So, like I said, these are cool days when you start to come up through the volume weighted average price of sell moves, because it has the potential to trigger good squeezes. And so yeah, I'm hoping that happens so that we can cheer about it. And if it doesn't, that's going to suck just because it's not as fun. We've already had a good move today. We've had a nice pullback down to the VWAP target. 30-minute VWAP support pretty much worked perfect. The VIX has broken down and sold off directly to the sell target of the 1 hour. That's worked perfect. The only thing we want to see happen now is the market just squeeze the living hell out of everyone that is bearish over the past couple days. And that would create for an awesome day. But yeah, now I will go look at QURE because I don't really have much more to say. That's the entire analysis for the day. I could look at some shorter term stuff and kind of walk through some short term stuff, but that's kind of the big picture. So we can kind of take a break back from that, and we'll go look at this QURE. I don't know what they do either. I'm not sure. Let me just take a peek here. 300 million securities offering. Interesting. Yeah, I still really don't know what to do. I have to do some research on that, but interesting. This has been on the market for, well, it's 10 years. Yeah, I mean, I have no systems that would tell you that the market's gonna do that. You know what I mean? That's not something I control. You know, like that move there. Again, that's outside of my ballpark. That, to me, is more of a move built off the back of more of a fundamental analysis. It would appear that there's some big changes happening at the company. I mean, I can already see a bunch of stuff here about, I forget exactly, but so new funding announces pricing of 300 million public offering. That was at 47.50, so capital raising. There was another one here, 200 million proposed public offering. There was some non-dilutive 175 million senior secured term loan facility, something, Hercules Capital. So there's a lot of money kind of coming in there, right? It seems like a lot of raising of capital and things, so money could very well be invested well and, you know, building out their company, things that I have no clue about. But that's basically my assumption. And so whatever that's going towards, clearly the market likes it. But again, there's nothing as far as like technical analysis that would, you know, dictate to you that the candle's going to go up like that on the weekly chart, right? But you could look at the chart and say to yourself that the market down here, like for example, started getting above the weekly and kind of pulled back to it. Now it's above the weekly. So we're starting a weekly long-term uptrend. So you could have arguably been long the stock off the basis that it's in a weekly uptrend. And then as a result, you would have been a part of that move, obviously, if you're holding. So that's the way I kind of really just view things, is uptrend, downtrend. I won't necessarily know the whole picture about a company, but I'll know if things are within uptrends or downtrends kind of thing. Just like you're looking at today. So cheers. Yeah, so that's another thing too. Let me bring you. You raised a good point there in your last remarks about standard deviation and blowing up this much, right? So there's a difference between stocks blowing up. Well, let me rephrase that. There's really not. There's like a difference between penny stocks and like let's say spikes that should drop and spikes that shouldn't drop. Spikes that are based off of like real good fundamental change of the company aren't going to give back the gains because they shouldn't give back the gains. But things that are spiked up based off of frothy momentum hype that aren't really legitimate, those ones pull back. So it's that having to differentiate between what is legit and what is not legit between a price increase. And if you look at QURE to me is kind of one of those examples. And now I could be wrong. I've been wrong about, something like this in the past. But this one is a scenario where, you saw it spike back here, gapped up, then just trade sideways pretty well. I mean, down and sideways, and then gap up. So this, that's not really like penny stock motion, right? This is up, consolidation, for months through earnings, and then gap up again. And then if you look back on a 10-year chart, we can see that this thing has traded to the $82 before, right? And sold all the way off, whatever. So on and so forth. So at some point, this has been an established, company with, whether it be big earnings or whatever, right? So it's not like just some random penny stock that's never been big before. So there's more to this company's story than just some random piece of shit penny stock that's pumping up, right? And, something like that. Now, could this be, way outside the standard deviation, which I should have had standard deviation on one of these screens. I don't know where it is, but I'm going to add it real quick. Might have accidentally deleted it something, but either way. Mother trucker, there we go. Come on now. So when we look at the that's a 10-year week. We don't want to go that far. 1-year week, all right. So we look at the 1-year week. The market just got up to +4, +5. So I would say, yeah, that's a very awesome target. I wouldn't necessarily be buying the markets long here because it's just way blown up. It's so far outside the standard deviation, the mean, that, yeah, I would be very happy about this if I've been long the stock, maybe even taking some profit here on the long, but doesn't mean that it has to crash just because it's overvalued. It could reestablish price action up here, and then this becomes the new norm. That would make sense if what is going on in the company is legit. Like, for example, let's say the company is supposed to be worth this much, then the markets will reprice structure and this will become the new norm. But if this blow up was all frothy hype and for no reason, then this would give back the gains, right? So that's how that standard deviation works, is it's for the most part. All right, so we've essentially ran up and got our target for that long breakout, guys. So if we'll zoom in here, you see where the red box starts. So that would be T1, and then T2 is going to be the top of the red box / yellow line. That will be T2, right? So obviously to get T2, T1's going to have to break out. So the same thing that we did before when we took these beautiful highlighters and said if we're above here, we go here. That's the same thing. So now if we can get above T1, we can go T2. All right. Rico, you asked that question a bit ago, and I obviously wasn't looking. I have only been looking at 1-hour charts, 30-minute charts, and some weekly charts. but we're probably on like a daily or sorry, a 30-minute or something. Oh, so we're just gonna sit back, we're gonna enjoy, we're gonna giggle while we blow this market up. Do you guys? Let's all just play a game. What do we think the news is gonna say today? Stocks put on gains, market starts to recover. Maybe I don't know. What do we have today? Did we have home sales? I don't even know what economic data we had. We had actually quite a few stuff come out, right? But I didn't look at any of that actually. I looked at no economic data today. I've looked at no news, and here we are blowing the market up to said price targets. This is a great day. Yeah, what was let's see. Here's the economic calendar, and we had something about Fed, Richmond, personal income, personal spending, PCE, core PCE. All right, sweet. I didn't look at any of this stuff. Not for a second. I haven't read zero news today and look at, oh my gosh, that's crazy. So was it the PCE numbers today? Was it personal spending, personal income that is driving the price of the largest globally traded market higher? Or is it the volume of the past couple days selling program that we're starting to shift upwards? I'm not sure. Could be either one. I would say we are squeezing out the seller volume trend of our current downtrend. And that is based off of the sell program that started a couple days back. I'm going to clean up some of this stuff real quick. So we're going to take that off. Bing, bang, boom. Today's recap is going to be amazing. It's going to be phenomenal. It's going to be so good. Let's go. We love the pump. Arnold loves the pump. You must pump it up, baby. You pump it, we go up. Oh, wait, what happened to my YouTube screen? Where'd that go? There it is. It was core PCE. Yeah, you got to that. When it goes up this much so fast, yeah. So, I mean, again, it's straightforward, guys. We're just riding the long up. Probably at this point to T2. Do things pull back? Maybe. Again, I could care less if they really pull back at this point because we've already acquired and achieved the main long destination. Not the main, but most of the long target. Now it's just a matter of trying to creep this bad boy up to T2. You know, and if we're lucky, it goes higher than T2. I'm not expecting that it goes higher than T2 for the moment because it just doesn't make sense for me to do that. It only makes sense to go up to T2. And then from there, we're gonna do the decision game. Does the market stay in a downtrend or do we enter a new uptrend? And that may or may not be decided today. That might be something that takes a day or so to unravel. Kind of like the last sell signal we had where you know, the market broke down bearish and then it popped back up and was positive, but then broke down bearish, right? So that might be a situation we see here where we go up to T2. The market flirts with going positive and then it's like, nah. And then tomorrow it's like, actually, maybe I do, right? Or maybe we don't. We stay in a downtrend. You know, again, I don't really know. I got to let the market develop more before I'd bring that plan, you know, but that's what's coming next. The decision of do we stay in a downtrend or do we go in an uptrend? And this is the T2 spot is it. So if you've been long, it's probably actually a good time to probably, you know, do whatever you want to do. But I'm just saying we're hitting our long targets. So when you hit long targets in the market, you obviously want to, I like to reduce my own position size and lock profit, right? Because that is the whole objective. When you go up to said target, lucky profit. So, anyways, cheers. Cheers to that one. That's a good one. But yeah, I'm assuming the news today is probably going to be something like stocks put on gains, right? Even though we're still in a downtrend. So that's another thing that can get a little scary is when we do these bounces like this, if the market doesn't flip into an uptrend and it actually goes back, it just stays in its downtrend, then all of these gains can be given back. And today's a day where the news, if this is the setup that actually comes, then today's a day where news headlines could be like, oh, stocks are putting on gains, markets are recovering, right into the start of a new swing leg down. And then if there was any bit of retail that read that news and thought that was a reason to buy equities, they get smoked. So, yeah. But anyways, we're not going to keep that on the screen because that's still a kind of an unknown, if you will. Yeah, so market remains bearish below this level, and these are our long targets, always were for the day. Oh, man, that is just an absolutely spectacular day. You cannot ask for prettier stock market movement than that. I mean, I guess you could, but I mean that is elite. That is top level. That's top notch stuff, ladies and gentlemen. I mean, golly. You gotta love it. I mean, you gotta love it. I mean, just look at it. The bottom red box, pre-market, 30-minute, over, under, pullback target, support, over, under, pop up, breakout, VWAPs, T1, T2. I mean, it just doesn't get cleaner. I mean, that is the definition of learn, plan, and profit right there, ladies and gentlemen. Learn said systems, plan it, watch market go, and do it. That is learn, plan, profit from the best. RG, baby. I don't really know what's going on. I mean, I haven't even looked at a 1 minute chart on the market all day. It's actually pretty nice. I mean, I guess we could just, it's just ready, watch. Oh, okay. So this is where, well, we don't want that one. We want that one. This is kind of a goofy. It's kind of goofy, but either way, this is the current micro support over under. Let's see, what is this guy? That one's weird. It's kind of a weird motion right now. There's that guy. So we've already tested that guy. And then we got this one. I'm just looking at the micro trend right now. Yeah, this one's just a little, it's kind of goofy, but essentially these are two. I'm going to change the colors back to yellow. Red is making me feel weird. Yeah, I mean, those are two micro kind of support trends right now on the way up. The current micro pop or current micro long targets, I mean, I could put the VWAP. It's somewhere like where I'm going to draw. It's probably like right where I'm drawing. Because it just is. I'm just going to add it real quick, though. I'll do this, what you're seeing on the screen right now, adding a volume weighted average price to the previous high. and this is really just so I kind of always know what the main objective is of this first kind of support push. It's to bring the market back to the 1 minute traders. So kind of like you know how today how we were talking about, hey guys, everyone that's been selling the market, they are you know, everyone that's been selling the market for the past 3 days, if we get above these yellow lines, then we're going to squeeze them up. They're off sides. That's the same logic with this 1 minute, but it's just happening here. So you see how the 1 minute is just, that would be it, right? So if the 1 minute was going to stay bearish, then we would, you know, kind of look for a lower high there, which already happened, right? You see how the market kind of tried it. See how it was down, and then it kind of popped up here and then tried a lower high. That's it, right? That's the key volume weighted average price trend of that high and that top, right? So if the markets are going to stay down from that top, not that they couldn't, you know, go up and then come down. It's just for a easy flowing trending motion, it would have to maintain below, and then it would be a lower high. But since it can't do that, it's not doing a lower high, right? And so that's the same story with like, look at the SPX here too. Here's a 30-minute. Oh, by the way, oh snap, I forgot about that. I was getting so ahead of myself. We've already hit the 50 SMA on SPY. Oh, right, duh. And the price probably changed over the past 30 minutes on SPY. So we probably already hit our target. I've just been kind of... See, this is kind of what happens. You just kind of get so far into your stuff that sometimes you do kind of miss things and forget a little bit at times. What am I doing? I gotta go back to SPY. We might have already hit our 50 SMA target. No, we haven't. So this is a good example too. That we not only look at the SPY, but we look at the SPX, and we kind of use them together. So you'll see here that we've already hit the SPX 30-minute trend, right? So I know all morning we've talked about volume weighted average price, and if we go above this level, then this is going to happen, blah, 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 right? Let's take a step back. What did we really just see, though? All we really saw was over the past couple days, the stock market break down into a downtrend. Yesterday, we found oversold support. We have now bounced the market back up to test the downtrend level, the 50 SMA. That's what we've done. Hindsight, not even hindsight, just like that is really what's happened. We went into a downtrend. We have now bounced back to the downtrend level. All of the other stuff that you saw me just talk about on SPY are other tools that we use to map off price action within that simple moving average trend. So we know where people are positioned in the market. We took the previous downtrend. We put a tracking device on all of the traders of that downtrend. And the tracking device said that they were located at 659.75 to 660.35. And that tracking device said if you take those traders above this level, they're going to go to this price because their key volume weighted average price basically says so. And then also, where's the 50 SMA of our... Also, the SPY just hit our target too, by the way. There's your T2 target complete. Definitely a really good area to... You know what? I can't say too much. You just got to do whatever you want to do, right? But that is T1 completion, T2 completion. You guys know what to do, right? So, just be smart, right? Do what you're supposed to be, you know, whatever. Yeah, so there's T1, T2 completed, and that's also because, remember, earlier we said we were in the downtrend, right? So, essentially we have a simple moving average system that dictates uptrends, downtrends. And when one of those uptrends and downtrends start, we will track the volume weighted average price, or we will track the market participants of said uptrends and downtrends. And the volume weighted average price of those uptrends and downtrends a lot of times is that early indication level of a reversal. You know, we're in a market situation where someone's going to be like, oh my gosh, the market was selling off and I should have known to buy. Why didn't I just get long? Look at the market's already all the way back up, right? Meanwhile, you know, here on this stream, what we did was track, you know, volume weighted average price from the past to suggest that this would be a low risk support. And then we used volume weighted average price from just the past couple days to figure out this is the level that once you're above, you will squeeze out some of those sellers, and then their max pain is going to be T1, T2. So it's using, you know, the mark. You have to. There's a lot to. There's just a lot to take in, you know, to be able to see that and know those things. So, anyways, I would say our long target destinations are complete for the day, in terms of what I was looking at, or I think what, you know, and based on my opinion, the things that I could see that would be obtainable today have been achieved. Now I would assume we're going to see maybe a little resistance in this area. And yeah, probably going to see some pulling back. I could give 1 minute micro targets, but they're already hitting. And so, yeah. Now we're going to see if a new, not a new downtrend starts, but this is where we see if the downtrend continues or if maybe it doesn't. And, you know, if we go into an uptrend, again, the market is going to have to establish above the 50 SMA. I think it's too soon to do that. It doesn't look like the market, just based off what I'm seeing, you know, it just doesn't, I just don't feel like the setup would be, let's take the market into an uptrend. I feel like today was really just a day to reset a bunch of short sellers. And now we're going to decide if we're going to keep the downtrend going. Where are my market internals? Let's see what the market internals are starting to say. See if we're seeing some negative selling here, which I know we're about to. I mean, you can already see it. Look at the pullback. Ding, ding. All right, so we can see there is some red coming in on the NASDAQ there. There is some red starting on the MAG 7. See, look at these two past candles on the MAG 7. Now look at your market, right? So we know that some selling is coming in now on the MAG 7. Some other market internals. We can look at the New York Stock Exchange down here. We got about 4 reds. There's a little red on the NASDAQ 100, or NASDAQ, tiny red on the S&P issue. So really that last pullback on the pretty much the high here, this pullback we're seeing, it's mainly contributed to FANG stocks, I would say. I mean, I guess there's a little pullback there on the spot. I mean, there's a little pullback on everything, I guess. So yeah, this last little pullback we're seeing, there is movement on every single market in the negative direction as we've hit that 50 SMA. So this is something where, to me, every single market is participating in that resistance. It's not like we have one market that's pulling it, some that are going. So right now there is a pullback on every single market. You know, you got MAG 7 pulling, you got S&P pulling, you have the NASDAQ pulling. NASDAQ 100's got a little pull to it. The issues on the New York Stock Exchange got a little pull to it. So, yeah. As a result, you can see what's happening to the market. It's coming down, right? Now, I would say the real reason that the market is coming down, yes, it's because issues are selling off, but also because the stock market has come up into its downtrend level, right? So now the market is going to make the decision. Do we want to start, kind of confirm more downtrend, right? We've bounced the market back to where? Back to 50 SMA. Now, do we keep it into a downtrend, which means resist it here in down? Or is it eventually going to go into a new uptrend? So this is, again, a very, very interesting, very good spot to be watching the market, because we're right at. So remember this morning how we said, hey, the VIX is at the level that's going to dictate uptrend or downtrend. If it goes into a downtrend, we're going to break the market out in this downtrend, and we bounce the market. It's the same thing now, but now it's now it's the market. So earlier we used the volatility index to be long bias the market as it breaks down. Now we're looking at the SPX and we're looking at the SPY, and we're using the SPY's 50 SMA to dictate topping the market or starting a new uptrend. I'm going to delete some of this stuff. I'm going to take that off. And now we're looking at, does the SPY and SPX basically continue its downtrend from here, right? So now we're going to go into a 1 minute, and we're going to start anchoring this high here. All right, and the reason we're going to anchor this high is because this is the 50 SMA on the SPY and SPX. So this is the 50 SMA, dictates uptrend and downtrend. And, you know, essentially, if we reject, then this is a good top, and the VWAPs are our micro bearish trend down to follow in the immediate. All right. So now we're going to be basically looking bearish the market from this high, and now for down as long as the downtrend lasts. Remember, guys, we did not exit the downtrend. Remember, we're still in a downtrend. We here on the stream, we're just counter long biased the market this morning because the VIX was breaking down and because we were getting above levels that could cause a squeeze. So this, again, really is just what? This is just a market that's in a downtrend from an oversold bounce back to its downtrend level. And it has yet to go into an uptrend. All right? That's what we're seeing. All right? So cheers. I know. Crazy. It's so crazy. All right, so yeah, that's pretty much how you do that. But yeah, so we're gonna look at this 1 minute now, and we're going to essentially, well, there's actually a couple. Yeah, this one's got a lot, what it appears like a lot of momentum down. We'll see though. So we actually have to make an anchor here, and we got to make an anchor here. I know it's kind of, it's just the way that this worked, right? I mean, it's got these candles are shelving down, so this is a scenario where you have to chase price action a little more. But that's going to be our rolling resistance level right now. So as long as the market's below here, we just stay down in the micro. That's pretty much it. You know, just how we talked about, if the 30-minute were to enter an uptrend, it would have to be above here, right? So now for this 1 minute trend to stay down, it's got to stay below here. And it's not that it couldn't go above there, right? It's just if there's going to be a lower low, lower high, trending sort of flowing formation, we could expect that yellow box I've mapped off is a location at which it could arguably do that, right? So, anyways, there you have it. Again, market's kind of popping up a little bit there. We actually got to adjust that. It's like this. I mean, realistically, it's anywhere from, it's really either to the high down or, you know, even as low as the start and down, right? We'd only really kind of think otherwise if we were above that box. But for the time being, it's not the case. So again, just making sure everyone's clear on narrative. We completed our long target destination, which was $662.11. At that point, I believe it'd be good to, again, lock profit in on my long ideas in that area, because that's the downtrend level of the stock market right now. So if the market wanted to stay in a downtrend, then new selling could come in and just keep the market down there. So again, it's kind of one of those situations like, well, you don't know if the market's going to go into an uptrend. And if it doesn't, then you could give back all the gains on the long move already. So, you know, that's kind of that. So now we're just micro bearish the stock market off that high, and then as long as the market does not get above the said VWAPs on screen, the micro bearish trend will stay intact in the immediate and arguably continue. I'm not really thinking, I haven't really thought too hard of where we might be able to pull this market down to be honest. But let's see. Go SPX. Well, so that's a 1 hour rejection back to the 30-minute down, then the 15. So that would be the 15's completion, the 10. Oh, I don't even have a 10 here. What about 5? Oof. Here. One's down. I mean, the only SMA that I really see that would be down would be the 5 minutes. So arguably this price might even come back to 657.87. I don't know how I feel about that one though, because I don't. Yeah, and I mean, 658 is the 10 SMA. So yeah, I mean, this might pull back all the way down to $658.01, and that's mainly just because that's where the current short-term 10 SMA is at, right? That's the 10 SMA trend. So if we just kind of look back, right? So market is below 50 SMA and down. The 10 SMA is the blue line, down, pop back 10 SMA, down, pop back 10 SMA, down, pop back 10 SMA, down, pop back 10 SMA. Market resets, squeezes out, then arguably continues down, arguably 10 SMA. So might be seeing a scenario where this pullback that we're seeing, or this little move, goes as far as about 658. Doesn't have to, but again, that's the 10 SMA, so it's just one of those things that if price wants to get the 10 SMA, then it's going to go there. If it doesn't, obviously want it, it's not going to go there, but that's really the only moving average I think that would be maybe logical price could go to. Some other things I was thinking about were the 30-minute volume weighted average prices from the previous dip, but the market structure there is just kind of goofy, so I don't know if I really trust that. I mean, if I'm looking at some of these volume weighted average prices from this last low on the 30-minute, it would suggest that our pullback on the 30-minute volume weighted average prices here, which is pretty much the same thing as just the 10 SMA anyways, so it's like, I don't know. It's the only thing I can really come up with. And then if we look at the downtrends and uptrends, the only other SMA is a 5-minute, right? We're below the 1 minute, so we've already pulled back to the 1 minute, right? So we can't really use that as a pullback target. Now it would be a counter target because it's above. When we look at the 15-minute, right, we're coming into the 15-minute. So we've already retraced the 15-minute uptrend. So it's like, if the 15-minute breaks down, well, we're not going to go to the 30-minute. We're using the 30-minute as resistance. We'll use the 1 hour as resistance. Oh, snap. There's a 2 hour right there, which I don't really look at 2 hours very often, but that's kind of interesting. What about the 3? So there's a 2, there's a 4. All right, so there's a 2 hour here, and then the 30-minute 10 is there. I mean, yeah, so like I said, it's just, there's not, when I'm looking at the trends, I mean, really, there's only the 2 hour, which we're testing right now. So we're testing the 2 hour uptrend level, which is right there. So obviously if that doesn't hold, then the only thing up next would be a 5-minute, and the 5 minutes all the way down at 657.87. So yeah, this I just think this move is supposed to be kind of coming / slowing down somewhere in this, like, this area, pretty much where this low is. I know that sounds kind of dumb because that's basically like the current low of day area. So it sounds like, well, duh, you know, like low of day bounce, whatever. But yeah, somewhere into this low of day and like 658 would be kind of that area. What up, Easy? Good morning. So, yeah, that's that. Also, I'm sure probably a bunch of you guys, we haven't even looked at Bitcoin today, but for those of you that were on stream yesterday, you guys obviously probably know we were looking to take Bitcoin down to, hold on, sorry, Bitcoin down to the next likely sell target, right? So last night we had broken down our previous sell target. So this is the weekly VWAP level over under, aka one of our sell targets, right? So we met the sell target and then we try to bounce the market back to our daily target, which was here, and then find resistance, and now resistance back down, takes out current weekly VWAP, sells down to next sell target. So we're still looking for Bitcoin to pretty much come down to this 108,097 level next. Granted, we pretty much got that sell target because the low of last night's move was 108,006 something. We're only looking to take it to the next one, which is 108,097. So far off by 500 points or $500, so on. It's not that it doesn't work anymore. It's not that the standard deviation doesn't work anymore. It's just during the time of like GameStop stuff, things were just not respecting standard deviation. And that's, again, it's just we had such an exuberant market that, you know, the markets could care less about, you know, being, say, 4 or 5 standard deviations. They were sending stocks to like 26, 30, 40, 50 standard deviations above the mean. So, you know, that's just kind of it. Is we were just in such an exuberant market, you know, and COVID and call it money and stim, just all this stuff that it just, we had a crazy market. All the people at home. So, yeah. Yeah. So, yeah, it's just not that it didn't work. It just wasn't respecting at the time. That's because we're just such an exuberant market. Yeah, so Bitcoin pretty much completed its sell target last night. We're still looking for Bitcoin to go lower. Obviously, for the 13 of you guys watching, you're probably up to speed. As Bitcoin was nearing October, we have changed from being bullish to bearish. Bearish for the next 2 years to year and a half. Do you think Bitcoin bull is cooked? Maybe. I mean, I am not looking for Bitcoin to continue going up for the moment. I am looking for Bitcoin to have lackluster to negative gains for the next year and a half. Overall. So, current price targets for Bitcoin pullback are about 52,000. Yeah. You know, it's, yeah, so yeah, I would say my extreme or my absolute max pain low that I would be looking to take the market on Bitcoin is 52,000. That price target will continue to get higher as each week goes on. And probably not too much higher. I can't say. So that price target could change to 60,000. It could change to 58,000. I don't control that. The market does. So when the time comes, right? But right now the price would be 52,000. In a year and a half, 2 years from now, it could be 60,000. So that is what I'm thinking. I mean, again, just repeating narratives here. Again, you're not swing long the market. You're not really bullish the market. You're still bearish. We were just doing a counter long move today to clearly reset the market higher just to continue selling lower. Did I know all of that was going to happen the moment I woke up today? No. But after I woke up and looked at the market and some charts and things and some levels, these were all things that could happen. And so far the market is playing very nice today. This is a great market. You can't complain. Now I know someone on the internet's going to be like, this market sucks. Look, it goes straight up, then comes straight down. What the heck? Who can even think of this stuff? Now this is rigged, which the market is rigged, 100%. Never a more truthful statement, probably. But yeah, I still day trade a little bit, not as much as I used to. Yeah, that's pretty much it. I've just turned into a little bit more of like, I don't want to say a swing approach, but I've started mixing in more kind of swing concepts along with the trading, if you will. Which is like this one right here, right? Our breakdown market. So the same, like, so again, a lot of the day trade ideas kind of start coming from swing market stuff too. That's what I've noticed too. It's like, really the good moves to even consider day trading generally come from like longer term-ish levels. Not entirely though. But yeah, I know somebody, someone in the market today is like, what the heck, that market's squeezing up and then it's slapping right back down. I mean, make this make sense. But yeah, so we got we have a Bitcoin target down to 52,000, and yeah, there's gonna be a lot of targets in between there, right? Just because we want it to go to, I don't necessarily want it to go to 50,000. I just see that the market can price in 50,000 or 52,000. Yeah, I mean you're absolutely right, Cooks. Like all-time high trading can get really boring because obviously volatility is low, so it's just the grinding days. Whereas now we've gone into a downtrend and volatility's increased, so now you're getting these really aggressive bounces because you have more short seller interaction. But absolutely, right? When we go into trading gets fun when you go into sell signals because volatility increases, right? And then you have good long days when you either catch the bottom of those sell signals, so when the downtrend is getting ready to reverse. So you have good reversal long days and market days on the lows or the ends of like sell signals, kind of. Or you have good long days as the market starts to go back into a buy signal. So that's why trading gets cool and back to fun when you go through the sell signals, volatility increases. It creates more of a reversal long trading environment where you can get bigger V-shaped bounces. And then also you have the start of the new buy signal, which is generally speaking one of the better times to get backswing along the market because you're not starting the reversal, but you're not late to the trend. You're right in the middle. It's when the buy signal has already taken place and now the market is rallied and now we're into all-time highs. It's like, yeah, now we're just basically grinding the markets higher, waiting for them to eventually stop going up and then pull back into a sell signal. So you're absolutely right. All-time high trading, very boring, very meh, because volatility down. And it's not like you've had a bunch of people selling the market short because you're in a downtrend. So you don't get that fiery short squeezing long momentum anymore. And then you don't get the long momentum of fresh new money coming into the market on the buy signal, right? You're kind of fighting for scraps at that point. So even though the markets are going down right now and yada, 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 this is setting us up for good future movement. Right, good future longs, right? So this is good. Yep, 658 pretty much there. 657.89 arguably coming because that's where the SMA is at. So, yep. Yeah, that's another thing too, Cooks. Yeah, 100%. That is something that you raise a very valid point. When markets are trading in ranges, or as price action is moving through fluent lower low, lower high, or higher high, higher low, higher high, higher low, or even in more of a sideways chop environment, levels are respected quite often. When you're just grinding up into an all-time high, right? You don't have this previous price action a lot of times that you're trading within that can be used all the time. So it does raise a very, very valid point there. Anyways, there is that sell target we talked about completing in the markets down to that 10 SMA of 657, 89, 91, wherever it is. 658. So that's done. What's next? Probably a little bit of a bounce maybe off that 10 SMA, maybe some hesitation. It's already happening. Now we're just probably going to do a micro retrace. God damn it. I hate when that freaking highlighter stays on. So yeah, we're just basically retracing the last breakdown here. So see that? Bing, bang, boom. Right there. Because market was, dang it, market was down, trying to hold whatever that was, and then it just broke down. So VWAP of breakdown, key price right there, 10 SMA here, bounced. So everyone chasing that last short on the micro chart just got stopped out because that's what we typically do. Again, we've come into the 10 SMA pullback destination. As markets complete, generally they have an opposite reactionary move. So, kind of like we saw here on the day, as the markets went up into our T1, T2 long target destination, you had the opposite reaction. And then the market sells down into our shorter term 10 SMA level, and you have an opposite reaction. Not saying that this is supposed to hold and bounce like, this sell off, but I would not. Yeah, we're still in a downtrend, folks. We're still in a downtrend. Just remember that. Oh yeah, remember how I was mentioning earlier, there's a dangerous, let's see what the news looks like. Because remember I was saying it's kind of dangerous how the market is going up like this because we could still have resistance and give back all the gains. And then the news could start early pumping that stocks have recovered and convince retail they should be buying, but it's really still a downtrend. I don't know. Let's go see if the news ended up kind of doing that. Pulled a fast one on the public today. Here we go. So here's one, at least from here's one from the Wall Street Journal. Stock market today. Dow rises after Trump unveils new tariffs. Pharma stocks. So there's that. News. Dow rises 200 points after inline PCE inflation report. So today, CNBC is suggesting to us that PCE inflation report is in line, and that is why the markets are now, well, they were up. Stock market, Dow, S&P 500, NASDAQ rise as PCE inflation data meets expectations. Dow rallies on Fed inflation data. Apple, Costco fall. Live coverage. Well, I wouldn't want to tune into their coverage because clearly that sucks. What else do we have? Market Watch, Dow and NASDAQ higher after 3 days of loss. So after 3 days of losses, the markets are now higher, but remain on track for a losing week. Well, they're at least doing a little better. So that, ladies and gentlemen, is essentially how you can forecast what the news is going to be like. But isn't that, I mean, does anybody not find that beautiful? How this morning we mentioned, hey guys, it's still in a downtrend. We're just bouncing the market. Could still give back all these gains. And as a result, the news will have told you that markets are rising and markets are up. And then they'll get they could be waxed later. And there goes all of the people reading the news, getting trapped. They said PC inflation data was meeting expectations. So things were up and things were good. Trump had a who knows what Trump had. I could care less what that man says these days. I don't listen to any politics for that matter anymore, or news, I guess, really. But yeah, so crazy. Well, not really crazy. Kind of, I guess, just expected. So, cheers. What would have been the better anchor to play? 10 SMA, break VWAP, or 50 SMA? I mean, I generally just anchor them both and just use both. The 50 SMA is just like, you kind of look for that one first and then the 10 SMA. That's generally how that works because, oh, I don't even have it. Wait, yeah, I do. Oh, I just couldn't see it. But yeah. Generally I look at both, right? So if you're looking at, see, this one's challenging because normally it would be anchor spot here, which is, it's kind of true, but see, this one's where it's kind of challenging to say exactly because normally the 10 SMA break would be up here, right? But the market broke down the 50 here, then it ended up recovering, which then means it actually broke over the 10 SMA, and then it went back down, so then it ended up breaking back down the 10 SMA and the 50 SMA, etc., etc., etc. So it basically broke down the 10 SMA and the 50 SMA at the same spot. So it's like really, I think both are valid, but I would have, and I did, I started here on that candle and here on this candle, because that's really where the market broke down and then also had the 10 SMA and 50 SMA. So to me, that was a little more important. Now, obviously, the high of this move is clearly working as like a resistance. So, if you anchor the 10 SMA break or even to this high, you're kind of seeing how that volume weighted average price comes in there. So you could be like, well, is it the VWAP off this high or is it really just the 50 SMA rejection? But so for this last instance, it was really just the 50 SMA and the 10 SMA break spot kind of came in at the same spot. So I think that's the one I follow. And so that's how we ended up using that trend to squeeze the market up a little more today. Because we kind of knew once the market was coming through here, the shorts for the past couple days, they're all cooked. They're done. They're not in, right? So we're going to pop them up. And then we're going to go back, retest our downtrend level, and we've confirmed the market wants to stay in a downtrend, so we're not quite ready to go back swing long. So we really just did an oversold counter long bounce back to downtrend resistance. So much drawing. I got to get better at that. Is there a way to just like, is there an eraser tool or something? Maybe there is. What is that? Not really. Whatever, I'm just gonna delete it all. I don't care. That I don't know. Is there a reason why? I have no idea. I mean, I think it's mainly just because it is a time frame that's kind of right in the middle. You're not late, you're not early, kind of right in the middle, kind of jam, and it is fast enough that it repeats frequently enough throughout the year that there is many new uptrends and downtrends to involve yourself on. It's not so slow that you're waiting years to get into a play or a long, and it's not so fast that you have too many false longs or false breakdowns. So I think it's just kind of that middle of the road timing and simple moving average that meets the requirements for enough activity and, stretch on its plays that you can play it frequently. So that's why I see it as. I see it as the time frame for short-term swing market involvement. And yeah, you're not too early, you're not too late. And there's enough room. And it repeats enough, if you will. Right? That'd be funny, Steve. Do. Yeah, so yeah, this same strategy can be applied to every single time frame, and the reason why is because, again, the 50 SMA, regardless of time frame, dictates uptrend, downtrend. So whatever time frame you want to use it on, the rules are the exact same across the board. The only thing you're going to change is frequency and frequency and reliability. If you go down to a 1 minute, you'll have 1 minute uptrends that work great and then some that don't work great. All right? You're going to have a lot that don't work great. You're going to have a lot of downtrends on a 1 minute that don't last for longer than a minute, right? Same as on the 30-minute system, you'll have some times, like the other day, where the market broke over the 50 SMA, and you could think it's a long, and then it just goes right back into a short. So you're going to get far less of this, kind of false break long back to short on a 30-minute than you will a 1 minute. All right? If you go from a 30-minute to a 4-hour, you're going to have far less long setups and less sell signals. Your trades would be swing long longer, right? So if we go to a 4-hour and we look at the 50 SMA, we would say to ourselves the last buying opportunity was here. So you would have been long on the 4-hour support here, and you still have yet to theoretically be bearish because you're not below. Right? For me, now think about that. So if you're long the 4-hour, here, look at this pullback. Look at that pullback. Look at that pullback, pullback, right? The 4-hour does not tell you those are going to pull back. But the 30-minute does. Right? So then we go look at a 30-minute, and amongst that 30-minute, we essentially, well, maybe not all of them, but, and I don't know how far we got to go back, but again, the 30-minute would give you the pullback, false pullback, FOMC, pullback, right? So that's really just all it is frequency of the uptrends and downtrends flipping based off time frame. And that's how you know the difference between a pullback and call it more of a correction in price. So if we're looking at the 30-minute, right, and everyone's saying, oh, you know, that's not a correction, you know, or the market's not a bear market unless it's down 20%, which those are true, but as it relates to what, right? If I'm looking at this 30-minute, I would say 30-minute isn't an uptrend. That's a pullback. That's a pullback. That's a pullback. That's a correction, right? Because we're in a downtrend, so that is now correcting, okay? This is a pullback. That's a pullback. That is the start of a new uptrend. So that would be a correction of the previous sell, right? No, I don't want to do that. I was done. And then again, you come over here and you have the same scenario, which is a long up, pull back, pull back, pull back, correction. Long up, 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 pull back, correction, FOMC. And then same scenario now. You have, oh my goodness, I hate Thinker's trading view sometimes, Lord almighty. And then you have, again, long move, pull back, correction. And now we're doing oversold bounce back to trend resistance. If we get above, we go back long. It really, you know, as far as the SMA system, it really doesn't get any easier. This is probably one of the things I'm most thankful for learning. Because, again, it pretty much keeps you on the right side of the trend almost all the time. Yeah, I mean, they're all important. I mean, if you're looking at the Dow Jones, you're kind of just looking at the, you know, the big staple stocks, you know, if you will, the top 30. But anyways, oh, sorry. So, yeah, you know, the Dow Jones is currently negative. You know, they all have their different trends, but I mean, the S&P 500 is a much bigger thing. All right, you're looking at the 500 top stocks of the stock market, right? So, generally speaking, that's I don't want to say it's the main. I mean, I look at them all, right? I look at them all. Less of the Dow. I don't look at the Dow as much. I look at QQQ and SPY more, but yeah. Oh, my text still says no audio today as we're working with our private group. I probably should change that, but whatever, it's fine for today. You know, like, here's another good, say, like, this is another good learning example, right? So, let's think about Bitcoin. Have a good one, bro. Have a good one, Cooks. Here's another good one, which is pretty much, you know, we talked about Bitcoin coming down to $52,000 or so. Right now, if Bitcoin, let's just say Bitcoin was going to go there, or even come somewhat close to going there, then what could be a sell target prior to that we know would complete, obviously, if the market was to continue going down towards 52 grand. So, for example, here's a weekly chart. So we see the weekly entered an uptrend back here, which is basically where I told everyone to start buying Bitcoin last. And then I pretty much said stay long Bitcoin till now. And now we're looking bearish. All right, so again, when we said buy Bitcoin, and also in here and whatever, but now we are neutral bearish Bitcoin. Basically, we don't expect the run to continue for the moment. We are now bearish Bitcoin, 52,000. If we are correct in going to 52,000, that's one thing. But obviously, if we do that, then we could say, hey guys, we have a target of 98,900, which is the what? Which is the 50 SMA on the weekly, so it's the weekly 50 SMA uptrend. If the markets were to even come close to 52 grand, they would have to do what? They'd have to get into a downtrend on the weekly, right? So, what does that mean? That means, again, if the market's going to go to 52 grand, then clearly it's got to go into a weekly downtrend, which then would make the weekly downtrend a target, because we already know for this analysis to come true, this one has to be bearish. And for this to be bearish, it has to go into a downtrend. In order to go into a downtrend, it first has to go to the level to test if it wants to go into a downtrend. All right. So, anyways, just in general, the way that you can kind of think in the market. So yeah, we got, let's actually see what our downtrends looking like. Are we down on the daily? So the daily's down, right? You can see that the daily entered down. Now, how long does that stay down? Again, I don't know. Don't really care. But currently the daily is down, so obviously the daily's not bullish. Let's look at, well, if the daily's down, the 4 hours down, obviously. So, yeah. The next one would be arguably the weekly. So this is a scenario where if the daily stays down, then we're going to trade down to the weekly. So this is kind of like this example back here, right? So you see how the market broke down the daily, stayed down, and had a good daily sell move. All right, so that was a daily 50 SMA downtrend to weekly 50 SMA uptrend. All right, so watch. We will add some levels here. So this was the start of the daily down. Well, that's not going to work. I got to throw a vertical line, Alt V. And then if we go to the weekly right here, this is the weekly 50 SMA here. All right, and then that would be your weekly 50 SMA tag and bottom. So Alt V. We can go back and look at this on, like, say, like a 4 hour or something. Maybe if it ever goes back there. All right, so there you have it. That was right here. This is a daily 50 SMA breakdown to weekly 50 SMA hold and support up. Okay. And so we just on Bitcoin broke down the daily, right? So the daily is now negative on Bitcoin. And our weekly level is all the way down at 98,900. So we had a daily breakdown here, so that would be Alt V. And the 50 SMA was here, so that's going to be like so. All right, 98.60. So right now, the target of the daily chart breakdown, if legit, right, in continuation, which again sounds kind of silly, I guess, would basically be to here. Okay. Now, you know, so we're just gonna say Bitcoin. Well, yeah, I mean, obviously, I'm not long biased Bitcoin anymore, and I'm obviously more lean bearish. Are we for sure going to sell down to 98,960, you know, now or in the next couple of weeks? Maybe, I don't know. But I do know that if the daily chart isn't recovering and the market's continuing down, we're going to go there because just obviously, duh. But how you go down to there's another question, right? Though the market may stay below the daily and the market may go down here, it's going to come, look at the last time, right? So, well, the last time actually really isn't the best example. That just broke down and went straight down. So, I don't know. Maybe we do that. But, again, there's a lot of different levels that we would watch for. So, just because the markets may go down here doesn't mean they can't counter pop, you know, like we're talking about. So, we will be looking, essentially, for prices to continue down on Bitcoin for the moment. And when we think the markets are getting ready to have counter longs, we'll mention it and, you know, what have you. Yeah. rough. Oh my gosh. Just wants to thank you. Trading view. Ugh. Now, I really hope I'm wrong on the whole Bitcoin bear market thing, and I hope it doesn't go down to 52 grand, because then I'll have to see a lot of the money I made just slowly dwindle away. But the good news is I'll still be alive. So again, guys, just make sure you take a second to share the video with Learn, Plan, Profit this morning. We really appreciate that on all the support. Cheers. Yeah, pretty much most of the fun market movement is pretty much over for the day. Well, I don't want to say it's over for the day, but again, generally speaking, 11 o'clock, this is where things will generally slow down. But we've done a good, or I would say done a fantastic job this morning, signaling to most to be pulled back to start morning, then back to long, up to here, then look to be locking profit and or bearish from here all the way to here, and then we're probably going to see a little bit of a bounce right here. So we've essentially mapped off the high to low of almost every single move so far in the market. Pretty much. Not bad. Let's check out good old YouTube. What is this called? This is selling program. That's weird. I still haven't updated my picture. I mean, you guys already really know what's happening here. You see this little bounce, what are we doing? We're just retracing the last micro trend, that's all. See, like that. Ding, ding, ding. So, you know, if I'm not necessarily mapping stuff off all the time, just know it's, you know, the strategy and the targets, you know, relatively are always the same. You're just taking the previous market's move, figuring out where their key volume's at, and then screwing them over. So this is ultimately where the 1 minute needs to hold resistance for this move to stay down. If not, then can go up, just like that. Where does this little pullback go to? Remember, it's all about screwing over everyone. So everyone who bought this last dip, we're going to run it down to their VWAP, most likely. Oh, where's their VWAP? Priced at 65849. Where was the low of this candle? 65856, so we're about 7 cents off. So we went from essentially VWAP zone of 65915 all the way down to 65856. So like a 50-cent short there off the 1 minute volume weighted average price high down to 1 minute volume weighted average price low. And that is essentially how you take the volume of a high and a low and you start to trap a market. Everyone who shorted down, VWAP here. Everyone who bought this dip, VWAP here. Now compressed. Thank you. I kind of thought the same too. I kind of like the blue and the red for the live, and I was really liking the black and the yellow and the white for kind of the generic video thumbnails. I was kind of digging that. So, appreciate that. Wee. Man, I'm just thinking to myself that it would have been a really good day if we were able to present this to like CNBC today. You know, that market could go here, resistance here, support here. Yeah, I think it would have been very useful for the viewers there. What to know? No, can't have that. Anyways, I'm gonna take a second real quick, and I haven't looked at any penny stocks today. I just kind of and it was mainly just because just kind of thinking that with our sell move down, it had to put extra, just with the way the market was, mainly the way the market was set up today, it would make more sense to be focused on markets today. And then a lot of times when you go into a sell move, you don't have the best follow through with penny stocks. So this is another good example. So check this out. All right. This is a pretty good example here too, guys. So you see how, well, you guys already know, right? The markets are in a sell signal. Things are going down, blah, 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 blah. Yeah. So let's just, we're just going to pop up this screen and we're going to look at a couple penny stocks that popped up today. This one had actually some decent movement, which isn't bad. But this one here, essentially what you have the buy algo go off, and then there's just nothing. Just topped out, and really nothing good. G, whatever this is, I don't even know. This isn't even a penny stock, never mind. Here's this one. Again, you basically have the system setting off the buy algorithm, and then just nothing. MIG, whatever this is, system sends off buy algorithm down, and then just nothing, right? MRM, whatever, market sends off buy algorithm last night, and then just nothing. Okay. And then W, whatever this is, market sends off buy algorithm, and then just nothing, right? So what you're seeing here is buy algorithm sent off, and then them washing shares, right? Washing the market, unloading those shares down, and then there's no recovery, right? And if you look, that's, again, contributed to the fact that your stock market, your SPY, is in a selling program, right? The stock market is currently bearish. So when the market is bearish, liquidity is coming out of the market. People are pulling money from the markets. Hedge funds, high-frequency trading, all this blah, blah, blah. Liquidity is exiting markets, right? And so a lot of times you won't have the follow through as often on penny stock motion during these times. And so the next thing is that when the market goes back into buy signals, that's generally where you will see, when the market goes back into buy signals, that's where money and liquidity starts to enter back into the market, starts flooding the market and buying equities, and that money will then trickle down into the penny stocks, and then that's when you'll have continuation on penny stocks. So that's why I really didn't mention or really look much at penny stocks today, just because, not that there wasn't some tradable moves, I just know that the market doesn't favor it right now. So, you know. But anyways, you can see the Russell 2000. Ready? Look at the Russell. Is the Russell in an uptrend or is the Russell in a downtrend? The Russell's in a downtrend. So your penny stock motion over the past couple days has been pretty much dog shit, right? It's pretty straightforward. So for penny stock traders, this would be kind of a moment in the market where you guys are like, well, there might be some plays, but I got to be far more picky, way less risky. And when momentum shifts back in our favor, then I could maybe, you know, be more optimistic or try to hit it harder, kind of thing. Hilarious. The YouTube algo's got us pinned on that 15 number. They don't want to pump the stream. Honestly, don't blame them. Do not blame them. That is cray.
But the squeeze is bearish, so I don't expect much right now. Hopefully the
Oh gosh, gotta love it.
continuous squeeze, the cycle about to get over.
Yeah, sorry that I'm not saying a whole lot in this moment, guys. I don't really have a whole lot to say. We've already, yeah, I mean, the market's just bearish. We're just in a downtrend. We counter popped it long today, nailed the exact high a day, flipped back bearish. Now it's just bearish. I mean, there might be some counter bounces here and there, but you know, I'm not really concerning myself all that much with that for the moment.
Rejection, second rejection, and you got a squeeze. So I think another 10, 33, another 20 minutes probably, squeeze there. We need the cycle to change it, or clip this, either one of them. If these people clip from here to here, right, then you could print money, or the squeeze probably would be turned bullish, then great, you could go a little higher, right, because they keep creating bullish divergence. You see this bullish divergence, keep creating, man. Come on. Negative changing the gear. Squeeze coming, get a little volume. So many rejections, the market keep giving rejections, the same one.
No, I didn't even post on. No, I don't even have a Twitter account anymore. I deleted it. Just, yeah, I guess, yeah. It's more like a really just waste of time and energy. Is more or less what it kind of felt like. But yeah, so no Twitter. No. Yeah, I don't use Twitter. I don't really use Facebook anymore. I think I deleted my Facebook, deleted Instagram, deleted Twitter. Don't use that. Don't watch any news. So I really just kind of shut off from all of that because, meh. I don't know. I guess I just did it for a long enough time. It's like, whatever. Now my whole objective is really just to stay here and teach market analysis on YouTube for free and grow this channel. Again, some skepticism on that, but we'll see. I mean, I can't imagine they will. You know what I mean? Like, I don't want to sound. I just have too many superstitions. That's the problem. My brain is always filled with superstitions. So, and I can't really change that. Once you've been on one side, once you've seen the darkness, you can't go back. Yeah, same thing, Cooks. I really never, I never listen or read anything about the stock market anymore, or about whatever the market wants to try and sell us. I don't read any of it. Probably just normal stitches. Normal stitches. Bruh. Yeah, I mean, yeah, and the reality is most of the people writing the news probably have never, traded the stock market a day in their life, or have a handful of stocks that yeah, just in general they don't. Yeah, the person writing the news probably has no clue what they're even saying. They're just regurgitating something they heard somewhere on the internet from some other economist from some other part of the planet. Yeah, like honestly, I'm even trying to, I can't even find my live stream on YouTube right now, unfortunately. That's the typical. It does not exist. Yeah, no, I changed. Yeah, it had some numbers at the end. I just removed those the other day. No, no, it has no. Yeah, that's just old people knowing who I am. Like I said, I think, yeah, like I said, that growth is it's just basic. It's from people that already know me and from our email list and things like that. Yeah, that's definitely a fact. Actually, I did notice that with one of the more recent videos. I actually did like okay, whereas like the longer one definitely did. And I was like, I bet that probably plays a role for sure. But yeah, probably. I think we're just gonna end it there today, only because again, not really a whole lot more to say. Not that we couldn't figure out some other things to do. But again, ultimately, the market has done everything we needed it to do today. It broke up. It went long when we said it would go long. It went long to where we said it would go long. It had resistance exactly where we said it would have resistance. It stayed bearish for as long as we said it would stay bearish. It stayed bearish all the way down to the 10th of May, which we said it would. So, yeah, I don't think you can accurately predict the stock market more than that on a given day. So, cheers to that, and I will catch you guys not tomorrow because tomorrow is Saturday. I will see you guys on Monday. Yeah, we're still in a sell program. Yeah, it's still a sell program. Does that mean you should be selling? Have no idea. Again, the sell program started back here. So pretty much since this day, pretty much since that high, we have suggested being bearish because the VIX started to break out. So we stopped being long. The VIX breakout took the market to bearish. We said we're in a sell signal at this point. So we've pretty much been bearish since, again, the high of this market. And now the market is in a downtrend, and the market has yet to recover. When the market recovers that 50 SMA, we will go back long the market. I will be streaming the day that happens, so if you guys come back, you'll pretty much see the day this flips back into a buy signal. We'll go back long by a swing the market. We will then giggle, and then we will look at the news, shift from bearish to positive. The news will then say, oh my gosh, stock puts on gains. Maybe the Ukraine war is ending. Maybe something Trump says. We don't know. We just know that when the market goes back over this 50 SMA, we will be able to go back swing long. And as a result, markets will go up. And as a result, the news will flip from bearish to bullish. And the bullish news narrative will hopefully continue driving prices higher for us. Cheers, everyone. Have a good day and a great weekend. And we'll see you next week.